to us privately, just use his private chat.
All right, I think we're live. We should be live. It says we're live, so we're live. Welcome everybody to a Sofi weekly episode hosted on a new channel. Today we have Michael with us. Michael, welcome to the podcast.
Thank you. Appreciate you all for having me on.
Absolutely.
Hey, Tevis, you're the host, right? Can you show some fucking excitement and some energy for this podcast, please?
This is the highest my decibel will go in terms of level of excitement, all right?
Goodness gracious. You're supposed to be like, welcome back, everybody. It's another Friday, Sofi week. You're over here like,
how do you do that on command? It's so animated.
There's 25 people here. You gotta give them a show. That's it. We're here, baby. We're here.
Got to get those lattes going, you know?
Exactly.
Yeah. So, I mean, yeah. He is a robot.
I'm learning about all of the functions in StreamYard, and we had a good argument behind the scenes because we put Tannor in the corner where the logo is. So
I know. So I'm.
Wait, who are you
my
saying?
Energy's gone too. I'm pissed. This logo's blocking. I gotta sit over here.
Who are you saying don't fall in love or don't let her watch her? She'll fall in love with Amit. Who are you saying that to?
What?
Somebody who said he chose this over a date. I was just.
I was
pumping you up, man.
You said don't ever watch her. So that's true, bro. If she watches, she's gonna. Yeah, that's gonna happen. Yeah.
Exactly.
Yep. That's true. All right, so Michael, who the hell are you?
Yeah, so I am by trade, a chemical engineer. I work for Anheuser-Busch, and I love to invest in stocks, pay attention to stocks, follow great companies, and also invest in real estate. So, and SoFi is my largest investment in my personal portfolio. So that's probably why y'all wanted me on.
So just for context, like what percentage of your portfolio is in SoFi?
Yeah, if we include overall picture, which would include my 401k, it's probably about 50%. And if we take out the 401k, we're probably at about 97% of my overall portfolio.
Well, that means you have more conviction than Riley, which is why
just 97. You got
just 97. I've got 3% Palantir. You know, we're building that up, but yeah, just 97 for now.
So why? What was the first? What was the first decision that made you want to invest into SoFi? Like, what started this whole process of you going down the SoFi rabbit hole and choosing this as your largest conviction bet recently?
So first of all, I'd never heard of SoFi until the SPAC craze. Like when the SPAC craze hit was when I found out about SoFi and started kind of researching. But I became a customer of SoFi in 2021. I think it was June 2021, and almost immediately switched everything to SoFi: direct deposit, Roth IRA, standard brokerage accounts. I got away from Mint and started using Relay, the credit tracking feature, and just pretty much very quickly fell in love with the product. And I think the biggest thing that I liked about it was the ability to dollar cost average, the daily buys, and frankly, the interest rate. I mean, you cannot deny that interest rate and that ability to suck you in. It was kind of by accident, to be honest, that it built up to such a high level of my portfolio. I just started by buying, a few shares here and there. And then as the stock dropped, I just kept throwing money at it. And then when Noto started buying in December, I decided to essentially double my targeted shares. I had a certain target shares I had reached, and then I went beyond that. And then Noto showed a lot of conviction. And so I followed suit and started just throwing money at it when he was back in December.
Right. So just a really quick question, because you said that you were using Mint, and I haven't had hands-on experience with SoFi, but it's always been something that I've thought about, like, Relay is the fastest growing product at SoFi right now. How does it compare to a Mint or, a Credit Karma or something like this for similar products?
So I've never used Credit Karma. As far as how it compares to Mint, I think they're pretty similar. To be honest, I think Mint has a little bit more, at least it did at the time, than what Relay has. But what I'll say is Relay's ability to then connect with everything else is what sold it for me. So to not have to go to another app or another website or another company to do all the same financial things, that's what sold it. And I think that they'll continue to improve Relay over time. And actually they have. The user interface has gotten better since I first joined. And so it's comparable. I think they've got room to go. And actually, Riley had some really great ideas on things they could do to further improve like control, as opposed to just monitoring finances. You could actually control finances even through external accounts. I think that's an opportunity. But in general, I think it's pretty awesome. It's also great. It's a free way for customers to get acclimated with SoFi's ecosystem, which is, I think, genius on Noto's part.
So, Michael, maybe I can just build on that. Not necessarily on the control point, but where you were going with regards to the opportunity. Because, I mean, we've all sort of given this answer, and also guests that we've had on have given a somewhat similar answer around what are the pros, cons. And I'd like to also throw in like an opportunity area. You said you're a product guy and you transitioned everything onto SoFi. What do you think, if you had to narrow down sort of one key product insight that's their strongest, and then one opportunity, let's say something that's their weakest, and then where is an interesting area that you think they can develop from a product perspective solely? I'm curious.
Yeah, no, it's a good question. As far as their strongest suit, to be honest, it's a hard question to answer because I like a lot of what they do. I'd say banking is probably the best though. And the early paycheck is cool. Not that it matters that much, but it's cool to get that little notification that you get paid early, faster than your peers at work. The APY, getting those notifications that you got that interest rate or that payment into your account is awesome. And all just the electronic features they have with banking is pretty incredible. I have used ATMs via SoFi. That's somewhat weird because typically those ATMs that you have access to are either in a gas station or a convenience store, a Walgreens, something like that, which is something I've had to get used to, as opposed to showing up to a Chase and it's a Chase ATM. I think that's just something you have to grow through. As far as biggest opportunities, and I just have recent experience with this, I actually just applied for a pre-approval for a mortgage via SoFi, did it all through the app. And for the most part, it was a good experience, but I think they can get better with integrations with the rest of the app. More specifically, I mean, when you fill out a application for a mortgage, they're asking you things like, what is your income? What are your assets like? Where do you have liquidity? Where do you not have liquidity, etc. And it was not tied in at all to Relay, which was a disappointment for me. I would think that with everything being tied in electronically to Relay, SoFi would already have that information and they could pre-fill it out for me. That was not my experience. Maybe there's a way to make it happen and I just didn't know how, but I guess that's, proof that it's not intuitive because I didn't see it. So I think they can improve that. What was good about the mortgage application, however, is once I had it filled out, I had a pre-approval letter literally within seconds and did not have to interface with a person at all. It was all done electronically. There is someone I have a contact with, but I haven't had to really talk to that person at all so far.
That's awesome. That's awesome.
Yeah, it was really cool.
So,
And then you get that letter, you show it to your realtor, you show it to any prospective, houses you're trying to buy, and that's that.
do you also have like the credit card or any other what do you call it, like credit products with SoFi, or is this just your first one that you're applying for?
This would be the first one. I don't have the credit card yet. To be honest, I'm waiting for better credit cards. I use a Bank of America Visa at the moment. It's just a cash rewards card. I like being able to change what I get cash back on. So theirs is just a standard like 3%, 2%, 1% structure. So I'm kind of waiting for some, I think, better products from SoFi before I get that credit card. And this would be the first debt product that I would have via SoFi if I go through with it.
Right. And then let me pick your brain on, the opposite side of SoFi whenever you're looking at this stock. Because you've dug into a couple different things that I've seen on your Twitter account. But whenever you're looking at SoFi Bank, that's one, portion of the story. What about the Galileo Technisys technology platform side of the story? Where do you think that plays in your investment thesis, and how big of a role will that play going forward?
That's what I was just about to ask, because when you got into it in the SPAC craze in 2021, I think a lot of people didn't care about it. Galileo, well, they bought it in 2020 and the SPAC was in 2021, so obviously it was around, but I don't think retail cared that much about it. Did you care about personal banking more, or did that come up in the thesis?
Initially, definitely did not. That was more of something I looked into later. I do think, however, that positions SoFi in an incredible spot for a couple of reasons. Number one, I mean, if you look at where banking is going, both in the US and outside, I think it gives SoFi exposure to a client base that they're not necessarily targeting. So, okay, yeah, we're not targeting you for a SoFi bank account. However, they can still get access to those clients via these smaller banks. It's also absolutely critical that these smaller banks have access to products like what Galileo Technisys allows. The integration with SoFi Bank just opens up the opportunity for so much. And you know, you guys have learned or followed the earnings calls and things like that. So you've heard Noto and Chris speak about what that strategy is. But I think that's absolutely genius on Noto's part. I think initially people thought they overpaid, but you have to remember he overpaid with shares that were overinflated. So how much did he really overpay?
Sure. Yeah. I hand you the keys to the SoFi castle in this, you know, example that we're going to play here. What's your next move? What do you want to see from SoFi going forward?
I think the biggest thing they need to focus on right now is the user interface on the app. Make it faster, make it more buttery smooth, make it cooler to watch and look at. That's really what sucks people in. And if back to the whole point about Relay being a free way to bring customers into the ecosystem, well, if they have a great experience on Relay, which I think it makes sense that they are focusing a lot on that part of the user interface, well, then you're going to want those other products. But those other products need to follow suit quickly. Otherwise, you're going to be disappointed that Relay is pretty cool and then the other products is maybe lagging behind. I do think they're working on that. I think they're probably going to release at some point a fairly substantial overhaul of everything at once. Just my speculation. I'm not sure if they've actually released information on that or not, but I think that makes sense. And I think just the user interface being buttery smooth. Think about a product like Apple. Why do people buy iPhones? It's not because they're the best technically. It's because they're the coolest to look at. Everyone wants one. You want to brag about having a MacBook, an iPhone, or whatever it is. And I think taking a page out of that book is the way that it need to go.
Can I pitch you a stock and then you tell me if you've looked into them or not? Because it seems like from your investment thesis or something that potentially you'd be more interested in like a Block Incorporated, for example, because of Cash App, because that seems to be their main focus is product centric first, creating the coolest, sort of the Apple of financial services products.
Yeah, I'll have to admit I haven't looked a ton into them, so I'm not going to speak directly on the company or the stock itself. I would just say that SoFi having everything under one roof is what sucked me in, plus that APY, and that's something that it's going to be a massive competitive advantage. Even if someone can match them, I don't see anyone really beating them in those areas.
Sure. Yeah.
It's actually really interesting, Michael, just to hear your perspective on a lot of these things, because it validates a lot of what we've also been seeing on our end, where, you said you fully entered both feet the SoFi ecosystem with regards to dipping into their product lines, which is fantastic because like that cross-selling is the whole value proposition from a user perspective. And then you said, well, credit cards is actually where I'm holding off for now. And, one of the things that we've been saying, and I see Riley smiling, is, 2023, credit cards has a lot of room to grow. And then from an app perspective, you're like, okay, well, the UI is definitely their lowest hanging fruit in terms of what they can fix. And so it's just nice in my mind because it validates that what we're talking about from a problem perspective is actually legitimate and shared by the entire SoFi community. And we're not like, alone in that thought.
Yeah, absolutely. And I think that if you think about it too, and if you look at Twitter and you look at any of Noto's posts or SoFi's posts and the number of people that go on and comment, that's congruent with what many people are saying. But if you look at the opportunity that SoFi has to just continue to grow in other fields, I think SoFi's main problem is a problem of being able to get the product in front of enough people. So it's almost similar, not that they have an issue with supply chain because it's a digital app or a website, but their reach is kind of their limit, if that makes sense. So for however many dollars they put behind that reach is going to directly translate to their growth. And I think their growth is almost intentionally limited. I mean, if you've listened to the earnings calls, you've heard Noto talk about a target of 400,000 per quarter as far as new member ads. I think that's very strategic because they have a very particular client base that they're going after. And in the meantime, they're focused on the under the hood back end things, which is probably why, in my opinion, the stock is so misunderstood. It's misunderstood, but Noto's focusing on the right things that take time. In today's day and age, everyone wants results tomorrow. What he's focused on to integrate Technisys with Galileo, with SoFi Bank, those things take time. I mean, I'm not sure if you guys work in big corporate, but if you've worked in big corporate, you understand these things, they just take time to integrate. And I think he's focused in the right areas.
Yeah. Yeah. And I think, speaking of that integration, just allows for a natural little pivot onto a big piece of news this week, which was the fact that SoFi emailed a lot of their users, I think all of their users, on a change that's going to be happening. I'm just trying to find it. So they reached out to debit card holders saying that on February 28th, late next week, that they're going to be changing the issuing bank for debit cards from the Bancorp Bank to SoFi Bank. And obviously this is a pretty big positive change because it really points us in the same direction that we've been talking about for SoFi going all in-house with regards to their cores, with SoFi having that vertical integration and continuing to have the flywheel effects that are only available when they're a full end-to-end provider of their services and are not reliant on third parties. Tannor and I were talking about this a little bit earlier today for a video that's going to be coming up soon, but I'd love to get the wider group's thoughts on that news, if you saw it, and if so, what you think.
Amit, by the way, this is pretty exciting. If you guys don't know the full potential of what this is, but
yeah, I was gonna ask. I don't understand this news at all. So someone needs to. To me, it seemed like a nothing burger, but I guess it's not a nothing burger. So someone needs to explain it.
Do you guys want me to give you sort of the pitch of what I think? And
I literally thought they're just changing the name, bro. That's all I was just like, oh. I literally was like, oh, thank you for wasting my time with this email. Like, this is stupid. Like, what's?
Yeah, no. So
yeah, Tannor, go for it.
Pretty much, there's a lot of different players that need to play, to make the full payment network here. Okay, and so pretty much what we're looking at is the issuing bank section of the process. This is the right now or before was the Bancorp Bank, which should not be confused with the U.S. Bancorp, as me and Tevis had done more research into. It's a really tiny bank that pretty much takes control of actually designing and sending out those cards for us and literally distributing the cards. Okay. And they also have a lot of the regulatory compliance and these sorts of things that they have to follow. And there can be lots of costs with this. And then it also has to do with the actual programming of the debit program on the back end as well. So what this pretty much means is that, one, we needed to be a chartered bank to do this. And two, we actually needed, to have great technology in place to be able to do what the Bancorp Bank could actually do previously. How I look into this is that that's probably because the core that we run our deposit and our debit cards on is now on Technisys. So this is large cost savings for us. We're able to get away from the fees that we were paying to, the Bancorp Bank and, just a little bit more in-house, which we've seen from times that we haven't been on, these sorts of systems, is that sometimes these partners have failed us. So, we're not being able to actually fail on the back end. We're owning this system ourselves. We're lowering the fees. And then not only this, Amit, this is where you should get excited. Now we can go to all the other customers, the Chimes, the Robinhoods, these sorts of customers that are also using the Bancorp Bank and say, guys, you're already Galileo clients. You're already the issuer processor clients. We're offering you the cloud native experience through Technisys. And now we can also be the issuing banks of the actual cards. We'll send out the Robinhood card to the client. We'll do all of this. And we're going to take a small little fee, but we'll bundle it as part of the AWS of Fintech.
Yeah, it's all available now that they have the bank charter and previously was not. So now that they're, a bank themselves, and they're already doing a lot of the back end side with Galileo, then this is just an extra incremental thing that they can bundle into that offering B2B with regards to issuing of debit cards.
I think the silver lining is we used to pay somebody else for the service, and now we're doing it all in-house. And the more that we do that, the more that we're going to save money on doing all this stuff ourselves. And whenever we have everything under our own umbrella, we're going to be able to build really cool stuff on top of it, which is going to be a really cool moat in the future when we're competing with other large traditional banks that can't move as fast as SoFi. So it's just like another step in the right direction to the whole bull thesis that we've been talking about SoFi from the very beginning, is that we're fully integrated and we're going to be all in one stop shop.
It's important to know that there's a lot of chartered banks, fully licensed banks, that still go out of their way to have a company that specializes in this, like Sutton Bank, like Stride Bank, like the Bancorp Bank, to still manage those processes, because maybe they've already have the technology and the innovation to actually do that at a more scalable level. So it's not always the fact that it saves money by doing it in-house, but obviously, if we are making this jump, it's because they've discovered some way that that it is going to save on costs, or it is going to make this product more effective, or some sort of way this is going to improve SoFi's back end, or else we wouldn't have made the jump. We had a great relationship with the Bancorp Bank. Obviously, things are changing for the the greater part. What's also funny is that we also have a relationship with a different issuing bank for our credit cards. We deal with the Bank of Missouri for our credit card processing.
Right.
If it's the case that we can also, use a similar core. I mean, technically our deposit accounts and our credit cards are two different cores. But as we actually start to develop that one core system that we're expecting for Technisys, we'll also probably leave the Bank of Missouri as well. And then that same sort of funnel of, what Michael wants to see, new premium credit cards for him to switch off of, Bank of America, it might need to be in SoFi's hands, so then they can lower those fees and give more of that back to the customer. And then that maybe you might see higher cashbacks, more premium cards, better relationships with, certain other partnerships and everything like this. And it's happening now.
Do you think this is also part of their attempt to become gap profitable, like finding as many different ways to reduce costs to get there?
Yeah, and it's just a natural transition. Absolutely, Amit. Like I love the way you're thinking about it, because it will, like, they wouldn't have made the change if it was not a good move for them to do. Like, logically, that makes sense. But the cool thing is, and just to double tap on a couple of things that Tannor said, they have both B2B and B2C tailwinds off of this. Because from a B2B perspective, it's going to be very hard or next to impossible to, in the future, let's say, find an issuing bank for debit, an issuing bank for credit, as well as the same entity or the same organization to offer all of the services that Galileo offers, because you usually get one or the other. And so whether you like it or not, you're cornered into having multiple suppliers for multiple different things and having a fragmented experience where your systems don't really talk to each other. And so the value proposition for SoFi B2B, after consolidating, of course, is going to help them with more efficiency and more savings from what they offer to their end consumers. B2C, so in terms of the fees, we might see better rates. We might see better SoFi Plus membership benefits as a result of them being consolidated. But it creates a competitive moat on the B2B side, because it just diversifies their offering in such a way that no other businesses can really compete, because you don't have chartered banks offering what Galileo offers and vice versa.
Yeah. And if you go ahead and Google this and you see the amount of issuing banks, you'll see a list. Okay. A long list. If you go and look at issuing or issuer processors, a long list. Then you type in issuer processors and issuing banks, the list gets very small. Not immediately small. It's not down to SoFi only. But then once you add in that cloud native banking core process as well, then that's where the search result comes back as one name. And that's what's really exciting, is that where's the moat is always the uninformed one-liner that people like to give, but that will be the moat. Like the B2B offering here, going directly to, or not even just B2B in terms of the companies that we're going after, but just like literally B2B, like going to the Chimes and the Robinhoods and everything, B2B2C, is that, I don't think that the Bancorp Bank will be able to stay at the lowest fees that we are, because a lot of the money, the same way that we run our business right now, like if you're only selling, checkings and savings, like you're going to have to price it so much differently than if you're selling a checking and savings and a lending product. You can kind of run the checking and savings on a loss and bring all the money through the checking and savings. or through the lending platform. So, having this bundle allows us to beat out the competition the same way Microsoft beats out Zoom with, offering Teams at such a low fee and everything like this, just because that's not where the profit is. They're pushing profit elsewhere, and that sort of bundling, monopoly is unfair. But I like to own the companies that have that unfair advantage.
100%. And I think, just to expand on that, the vertical integration, obviously they would have not done if it didn't make sense financially. So that's why I said earlier that Noto's focused in the right areas strategically. Bringing up the B2B is spot on, because let's not forget about the small banks that rely on these other issuers. And now SoFi is able to come in and present that you don't need to go to multiple people. You can just work with us. As long as they're able to build that trust with these businesses, which again, Noto's talked about in earnings calls, he's going after a large client or clients, but also these small regional banks are going to be absolutely critical to, I think, SoFi's success and their strategy. These banks have to update their systems, and there are certain customers that just will not switch to digital only, and this is how SoFi accesses those customers and gets interchange fees, etc. So Tannor, I think you're spot on with your comments around, look, you can beat out the competition because you can offer all of this and be cheaper. So you can actually get the best of both. You can be the best product and cheaper because you have that one-stop shop, and that's something that only companies who vertically integrate and have something like that are able to do.
Well, if we're just dishing out compliments, I want to give you one as well, because we always talk about the Chimes and the Robinhoods, but really I think the big selling point is going to be to the regional banks and the people that have no online presence right now. It's sort of right now everyone talks about, I'll bring up Palantir as an example, the government contracts and these sorts of things, but no one's talking about the Foundry for Builders or these sorts of things, where it's like we can find hundreds, if not thousands, of new customers that have had no system like this at all, and we sell them almost a digital product that needs no customization, and it's sort of the Lego-like, pick tier A, tier B, or tier C. With our larger clients, we can literally have full teams work with them, and I think that's really what's going on with Galileo right now with large banks and stuff like this. They're talking about a long sales process, but for the small regional banks, it will be a potentially a single day sales process.
And
Michael,
do you
go ahead, Michael? Then I'll ask you a question. Go ahead.
Sure. I was just going to say, let's not forget, let's think about these regional banks, these credit unions. Think about who runs those, right? These aren't necessarily people who are on the cutting edge of technology. So if you come to them and say, hey, you need to update your website and you need to get relevant, there's going to be a lot of initial concern, pushback, hesitation. But if you're able to come in and say, we are the one-stop shop, you don't have to work with us and then work with someone else and it's fragmented and here's a PowerPoint I'm going to sell you. It's no, here's actually how the system works and what we can do for you. That's your foot in the door and that competitive advantage. I don't see other companies having. Obviously, SoFi has competitors. That's not what I'm saying. But they have a competitive advantage that I don't see in many other companies.
Well, so this was sort of the way DocuSign. You're making me think of DocuSign right now. The way that DocuSign got very popular is that the way that they pitched it to up and coming companies was that, okay, this is a product that's very expensive, but the way that we're going to sell it to you is look at what you're doing right now. Look at the paper, the printing costs, all the energy that you're doing for that, the mailing, the faxing, all of those costs. And they said the average envelope that you're actually sending is about $18 whenever you factor in everything. Okay. And so they could actually sell this product because it was a cost saving measure, even though the upfront cost was large and the ongoing costs were large. If you actually compare it to what they're paying now, it's a completely different offering. This will be the same thing. You're going to a lot of legacy type players that might have, older views about how this banking system should work. But once you show them the numbers, which is obviously how, Galileo has been so successful. We're not doing this because we have a great, brand name. We're doing this because we're offering a better product. That, I think, is what's going to win over the regional banks, is the sheer numbers. You're going to save costs by switching over, and you're going to have a better, product by doing it too.
Michael, I was going to ask, do you have your money in SoFi Bank, or it's still in a different bank?
The vast majority of my funds that are liquid are in SoFi Bank. And actually, I'll expand on that too. So I have real estate investments. My business account for real estate investments is through Chase. Chase's APY is terrible. The only reason it's through Chase is because SoFi doesn't offer business accounts yet.
Yeah.
But what I did was I actually set up a vault within my SoFi savings account and just titled it real estate. So the funds would not be commingled, and I would be able to say, okay, this is the real estate funds. This is my just normal funds. That way I could take advantage of the APY. So I actually
Wow.
pulled money out of Chase, transferred it all, of course, electronically into SoFi. And that money now became part of the flight away from legacy banks and into SoFi, chasing the APY. And then anytime I need it back in the Chase account, of course, it's just another digital transfer back.
So like your real estate LLC and that you use business expenses, all that stuff, all of that you can still do even if the money's not literally in the Chase account the whole time.
Yes and no. So let me make super clear. I'm not giving legal advice. However, you do have to be a little bit careful with real estate investments or any LLC when you do commingle funds. So this is something you have to watch and be careful. It's, basically buyer beware. It was a risk I was willing to take to capitalize on that APY. I think if I was right now, I only have 6 units, 3 properties. If I was, if that was 10x larger than that, I might, take a different approach
Yeah.
and leave it in Chase. But again, it was a risk I was willing to take, and I think a lot of smaller landlords like myself would be willing to take. And that's just another opportunity for SoFi. Noto has said we will go after that when the time is right.
Yeah, if they make a business
So-
account, I'll go from Bank of America to SoFi immediately. Like I have no
100%.
bro, Bank of America, I had an overdraft once and I was talking with the lady, they charged me $18. I was literally like, I don't want to say I was cursing this lady out, but I was like, it's $18. Like, can you just fucking get rid of it? And we were on the phone for 40 minutes and she's like, no. And I was like, why? I've been with you for 6 years. Like it's $18. And so I have absolutely no allegiance to them. But I guess there's a question for the panel. When do you think we get the SoFi business account? And is there a regulation or legal thing stopping it from coming out?
There's 4 things that Noto has told us in September, early September, when he was at a conference talking about what we're doing to transfer off of our modern core or onto our modern core. And it's we're trying to replace lending, checking and savings, which recently we got proof that Tevis talked about, and that's the debit card switching over to SoFi Bank. Credit cards are going to be moving on to our own modernized core, and then the invest product. Those 4 things are the only things holding back SoFi from being a fully vertically integrated app. So I don't know. That's the big question.
Just to build
right?
on that, Noto has said, and along with the rest of SoFi management, that they will be fully migrated onto their own cores by 2025. So that's the number to keep in mind. We're already in 2023. Credit cards is feasibly going to be next.
Yep.
And then the invest product after that. So in 2 years, it's all in-house if we keep to their timelines. And they haven't missed timelines so far. So I'm not really doubting what they're saying.
So where's that exact timeline that you're finding? Because from what I see is that they are from their original investor pitch or whatever for the Technisys acquisition, they said that they're going to see cost savings between 2023 and 2025. So that could be all Galileo side. However, I assumed that some of those cores might be switching earlier.
They mentioned, I believe it was a Goldman Sachs conference back in October, that they're in the process of migrating one of their cores right now. And by 2025, all of their cores would be migrated. So regardless of the margin side of how the tech platform came in the Q4 earnings, this is just a much longer play in terms of that vertical integration.
I love it. I love it.
The coolest part about this whole thing is that we're waiting for 4 things. Lending, checking and savings, credit card, and invest. And it looks like from just an early onset of 2023, we know that SoFi has been hiring new staff for credit card offerings or project teams. We have some sort of information that they're working on a new UI for invest. That's probably not anything to do with the back end, but it looks like we're heading into that general direction. And I just don't see how the SoFi is going to go crazy as soon as they get fully onto one core, and then they start building really useful products for their users. Then the differentiation between all the banks is going to be very, very clear, and SoFi is going to be very near the top. We're already ranked at the end of the year. NerdWallet ranked us 7 out of the how many placements? We dominated a ton of spots, but I really think that's going to continue to grow in the future as soon as we get onto this one core.
Yeah, so I think the thing you were talking about with NerdWallet is that for the year of 2022, they placed us as the best checking account, best checking and savings combo, best personal loans. It was 7, first place finishes, not 7th.
So, Michael, I guess I'll pose you a question. You've been a SoFi member since 2021, and you probably have been frustrated and wanting the app to actually improve. What do you think whenever we get fully onto our own back end? What do you think the first few things at SoFi? What things would you like the app to the SoFi app to become, like in the future after we're fully on our own core?
It's a good question. I think the first thing I want to see is for it to just, like I mentioned, buttery smooth. I want it to feel buttery smooth. I want it to feel like my iPhone feels, if that makes sense. There are times that it's a bit laggy, and I don't have lag elsewhere, so I don't think it's an internet connection thing. But I will say, I think that they're already best in class. And so as a customer, I'm thinking, I want my iPhone to be a little bit better and have a better camera, but if it has the best camera available, I'm not leaving. I'm not going and buying an Android. And so I think it's still a very sticky product. But to address your question, what I want to see the user interface just get more smooth and faster and snappier. And then after that, I think, Riley, you had some awesome ideas that you've posted on control. And what I mean by that is, so let's think about Relay. Relay right now is a lot of just monitoring. I'd like to go a step further, and expanding on what your idea was. Let's have control over things like subscriptions. Let me, within the SoFi app, not even leave the app, not have to go to the website, turn on and off my Netflix subscription, my Hulu, my whatever it is, within SoFi. Now, obviously, that's going to take some technical back end things for them to do. But if they're able to do that and continue to expand that, I think that they have a product that no one can catch up to. And it's something, this is a discussion point I've had with people before on, is SoFi's, do they have a moat? And do they have a moat around their technology? Can Apple, can Goldman Sachs just copy what they have? I think the answer is no. And I think if you look at how long it's even taking SoFi to integrate into their common core, how could anyone say it's easy that you could just hire a couple engineers and put together a SoFi? That's just simply not true. Yes, anyone can make an Acorn, but not everyone can do what SoFi is doing, which is being that one-stop shop. And that's the difference. That to me is the alpha that the market is getting wrong. And that's why there's opportunity here.
Yeah, and just to piggyback on that as well, I think another angle to look at it for what is the incremental benefit after SoFi having everything in-house, in my mind, from a user perspective, will really be SoFi Plus, because like we were just talking earlier about just one thing moving in-house, which is checking, and all of the different sides or synergies that we could see in the next coming months as a result of this consolidation. Imagine now if everything was in-house, what that SoFi Plus core could become in terms of not only the cross-selling, but also the different promotions that they can have within the benefits portion of SoFi Plus. And so I just think that once everything is in-house, SoFi is no longer dependent on anybody else externally, and they can really bump up the benefits of SoFi Plus. It just becomes a game of what is their customer acquisition cost, what is their lifetime value, and how can we optimize that equation? Because you don't have any more dependencies.
And something I think in this new kind of digital era with banks that every bank should be worried about is how easy it is to have a run on a bank now. If let's say Chase comes out and does something that upsets their customers and people all of a sudden want to boycott Chase. Well, back in the day, it was kind of difficult to boycott Chase. You have to go down to the bank, pull out physical cash, move it, maybe write a check. It takes 3 business days, sometimes longer, whatever. Now you hop on your phone and you yank your money out of that account and put it somewhere else. To you and I, that's just a transaction you do on your phone. To the bank, that's a big deal. They're having a run on their bank. So there has to be something that keeps that moat and makes it a sticky product that you don't want to. Number one, you have to gain and keep that trust. You can't have a moment where you lose it and make people want to boycott you. I think Noto's done a good job of that and will continue to. He's got the right mindset as far as being customer centric, customer focused. Everything they do is kind of like that Amazon mindset. The customer's the boss. That's a great way to be. And then 2, If you've got everything with them, it does become kind of sticky because it's not as simple as just pull your money out of the account. It's, well, I've got my mortgage with them, I've got Relay set up, I've got my investment accounts with them, and that is the difference. I think legacy banks ought to be very concerned about how easy it is to yank your money from those banks now.
Yeah, and even speaking on that with Galileo, they came out recently with a product called a direct deposit switch, which is making it, I think their term was 50% more effective for people just to be able to change their direct deposit. And that's not just for SoFi, that's for all the clients that actually end up switching with that. So that could be the legacy banks as well. But still, that still puts Galileo leagues above the other products, because a direct deposit client is worth 6 to 10x more than a regular just depositing client. And if I can just go on another tangent, unless someone wants to say something, think about the amount of banks or neobanks, I should say specifically, that run their entire business just with checking and savings accounts, right? And just the way that they're actually doing that and still trying to make money, making a profit without having any sort of lending products or anything like this, right? It's so fascinating to me how much money there truly is in the financial services sector. And you can make an entire business with hundreds or thousands of headcount off of a single product that we at SoFi have in total. We're trying to look at it as a holistic approach that legacy banks have had down forever, but now in terms of the digital space is only getting started, and it seems like it's not as easy as people are making it out to be. SoFi is making it look easy, but truly, if it was so easy, there'd be a whole lot of copycats, and there just doesn't seem to be the case.
Yeah, I mean, just look at Goldman Sachs' failure, right?
Mm-hmm.
If a bank that size tried and it didn't go so well, then it to me proves exactly what you just said.
Right.
When do
Exactly.
we think they shut down Marcus? Because they haven't shut it down yet. It's still and they're doing a $30 billion buyback. They announced today, so that made shareholders a little bit happier. But
yeah,
I still get ads for it.
I think they're changing the client that they're targeting. So I don't think that they're doing it for regular retail people. I think Marcus is staying available for high net worth individuals.
Yeah.
Okay, so then there's literally no competition at that point so far.
They're doing a
at least
$30
from Mark
billion
Goldman.
buyback.
Yeah.
That's why,
But because there's an article
do you,
yesterday that said shareholders are not happy with where the company is going, and
in what world do you lay off 3,000 people in November and then do a 30 billion buyback in February?
I mean, I get it. That's capitalism,
the exact
right?
world.
No,
That's the exact
I
world.
understand the logic. I'm just like, come on.
It sucks. Yeah, it's
Just so close together.
It's what Facebook
legacy banks have turned into this flywheel. It's the same thing with Berkshire Hathaway in a way, and I hate to put them in this field, but it's just truly, it's like, are we even trying to grow anymore in terms of, Berkshire Hathaway doesn't fit in this category exactly, but these banks aren't even trying to grow necessarily customer counts and deposits or anything. They're really just focusing on return of equity and the overall shareholder return. Yeah, these 70-plus-year-old CEOs are making sure that their compensation packages are nice and ripe. Okay, they're not necessarily focused on making sure that this company is going to last the next 200 years. I do not believe it. I truly believe, and I mean they'll give a half-assed crack at it, but I mean, the truth is I do believe that return of equity is not necessarily the only metric that you want to focus on with banks, because it's only, hey, what are we actually returning based on what we're actually holding, not actually trying to grow how much you're actually returning, if that makes sense.
Absolutely. So one interesting thing happened this week that we haven't talked about yet, because it doesn't necessarily pertain to SoFi the company, but more so SoFi the stock. And generally we tend to shy away from those conversations because we're all fairly long-term oriented and not planning to sell or trade SoFi anytime soon. But with that said, I thought it was interesting, Michael, especially because I see a lot of your valuable content on Twitter, which is technical analysis. And you posted as well this week about a golden cross, which is I would say I don't really.
Is there
follow.
any similarity between a golden cross and a golden shower?
I will kick you from this podcast.
No, I've never heard of golden cross.
Now that I have the
I've literally
ability to
never
do
heard
that.
of that term. So I'm saying is
All right, hold on.
It's technical analysis. This is why I'm just here to listen.
Technically, a golden shower is very interesting as well. So I'm just.
Yeah, I'm sure you know all about that.
I think-
Okay, so let me. Amit, why every time, man?
Bro, when you said golden cross, that's the first thing that came to my head. So I'm like,
Asking the
So
tough
yeah,
questions.
there's a golden cross. There's also the counterpart, which is the death cross.
Yeah. So let me see if I can explain it, and then Michael, just keep me honest. So basically, a golden cross and a death cross are two opposite things, and it's basically when the 50-day moving average crosses the 200-day moving average, I want to say. So that's the golden cross, and it basically highlights that the short-term.
Well, the direction of the cross is what defines which one it is.
Let's get some visuals.
So, Michael, do you have anything to put up?
Let me see.
you can send the picture on Twitter too, and we can.
Let me see.
Oh yeah, let me do it that way. That'll be easier. So give me just 1 second.
Well, I actually have the golden cross up here, so I can just show my Weeble. Let me see if this works. Present.
And to be clear, it hasn't happened just yet, right? It looks like it's going to happen here in the next couple days.
Okay, so can people see this Weeble screen?
Yes.
Okay,
Yeah,
so
you're good.
the blue line is the moving average. So basically what that means is it's the average of the last 50 days. And then the red line is 100 days, which we can ignore for now. The pink line is 200 days. So the average over the last 200 days is SoFi stock has been trending down, obviously, because, it's been trending down. But in the last 50 days, you can see this move up, which was backed up by earnings and so on and so forth. And so in the last 50 days, it's moving up. And so this right here is what the golden cross is when this blue line crosses over this pink line, which would signal a very strong momentum in the short term. And that's an incredibly bullish thing. A death cross, by contrast, would be if it's the other way around. If the blue line was above the pink line and it goes below it, would signal a very negative. So, for example, this right here is a death cross, and the stock falls. But the reason why I liked this in particular, when I don't really follow technical analysis, is because these generally take a long time to materialize. This is a daily chart, of course. So this is months and months and months. I mean, back here is December. So they take months to form. And usually when they do, they show a longer trajectory of momentum up or down. So it's not like an intraday signal or something like that. It's more so a long-term technical signal. Now, I might be butchering that, but Michael, you can keep me honest.
No, you did a good job. And actually, if you throw that back up real quick, I wanted to point something else out as well.
Yeah. Yep.
So you see we're coming up on a golden cross. You look at the volume, and that was, of course, backed up by the earnings. But if you look at the volume of buys when we had the breakout, essentially, and we finally got up above that 200-day moving average, a large volume breakout is significant. That's a big deal. If you look at more recently, we've consolidated. We're pulling back. I would call that a bull flag. Let's see. But that's been done on lower volume. That's exactly what you want to see with a momentum shift. So now you've just got less people kind of trading. The broad market's been pulling back. We all know that. So I don't put a whole lot of stock in, what's happened more recently after those earnings. Doesn't matter as much. And you hit the nail on the head. Short term, the stock market is a voting machine. Long term, it's a weighing machine. And so short term, something like a golden cross tells us where people are voting. But if you also look at that kind of consolidation period when we're in the low fours, let's remind ourselves that's when the CEO is buying the stock itself. Looks like he maybe nailed the bottom. Right. That is exactly what you see on a reversal. Now, one thing to keep in mind is the overall broad market is very shaky right now and is actually coming up on potentially a death cross. I think it was on the weekly, if I remember correctly. The NASDAQ is potentially seeing a death cross. So that's going to be a lot of weight. But SoFi can just stagnate. We've got the 200-day starting to flatline. We're going to have a golden cross. I'm okay with sideways movement while the rest of the market figures itself out. And frankly, I'm even okay if it continues downward and falls below the 200-day, comes back above. Again, just choppy sideways movement. To me, that is just like a loaded spring. And we continue to coil it up and coil it up. When the market figures itself out, this will rocket, which is why I think technical analysis can just be part of a more broad assessment on what a stock and a company's doing. It does not replace fundamentally what a company's doing, but it's a good way to understand how the market's voting and where people are seeing things. So yeah, I think we're in a great spot. Like I said, I'm okay with choppy sideways movement for a while.
So,
And I think it's good to temper expectations. A lot of people I think the 2020 and 2021 market broke a lot of people of what investing is really all about. And frankly, a lot of people just started investing during that market. So they think it's all about, meme stocks and short squeezes and buying options and things like that. Very, very, very few people build wealth doing that. Some people do, but very few. And over time, the people who really build wealth are the ones that buy good companies and just wait.
Yeah,
that's sort of why I don't look into technical analysis too much. I mean, from what I know,
100%.
If we were to look at technicals, I mean, wouldn't a technical, analytic metric or whatever be the fact that we actually were a SPAC, and that a lot of these SPACs were sort of acting in the same way, and that was a very bad sign to see. And it's like, okay, well, if you were to just look at it as a technical analysis point, you might group SoFi with the rest of these, I can't. I'm sorry, Tevis. I tried to think of another word. Shit companies.
This is the first time I think I've ever heard you swear on a podcast.
No, he said ass. He said ass.
No, I know. I mean, tonight is the first night, so thanks for that. But look, I would say I agree. Absolutely,
It's not even
Tannor.
true,
I don't.
but-
Well,
Go ahead. Go ahead.
I agree. I don't necessarily trade on the technicals. I might use technicals to time entries, like intraday, but that's just penny pinching at that point. The reason why, though, like on a more holistic level, why it works is because it's psychology, right? Like if something happens repetitively, then people start to expect that same action. And that's why, technical analysis is even a field. I'm obviously oversimplifying it, but if nobody believed in a golden cross or death cross, they would not be a thing. And so they are a thing because of the consistency of them actually coming true, because it becomes a self-fulfilling prophecy. When we say, oh, golden cross, let me buy right now before it crosses, what's going to happen? It's going to cross and actually, go higher. So to some extent, technical analysis is just psychology simplified.
Yeah, and it also kind of tells a story, right? Like if you look at when that death cross happened and then the stock just got pummeled along with the rest of the broad market, it was brought down with the SPAC craze, etc. Now we've been able to find a bottom, consolidate, and basically the market was able to find kind of a fair price. What was the market willing to pay for SoFi? And you talk about looking for alpha. I'm looking for an advantage that the market is getting wrong, and being lumped in with SPACs made that easy. It made it very easy to say, SoFi was a SPAC. I'm not touching that. And then you layer in all the rest of the problems that the market had and the way people felt about, Noto and SBC and everything else. And we completely lost what SoFi was actually doing under the hood. That is the alpha that we are all sitting here talking about. That, you could say the market is efficient. There's that efficient market theory that Warren Buffett famously disagrees with, right? And the market isn't efficient. There are gaps. There's gaps in every market. And that's where the opportunities lie. And again, if you've got a long-term mindset and your mindset is to accumulate over time, I'm thinking, when I say long-term, let's be clear, 5, 10, 15, 20 years. Most people think long-term, oh, I'm going to buy it for 6 months, a year. Long-term capital gains is after 12 months. That is not a long-term mindset. I don't know what happens tomorrow. I have no idea what happens geopolitically. I don't know what the Fed's going to do with interest rates. Is it a half point, 2.2? What I do know is that SoFi is executing and that they're going to grow. stock goes back down to $4, that just means I can buy that many more shares when I do my everyday dollar cost average.
And I guess that's sort of is the exact mindset that I have, and why I never do look at technicals is because I've never looked at a chart to tell me what I think the intrinsic value of a stock is or where the alpha is. And I mean, there's no chart that's going to tell you that there's alpha there, because then the gap would fill. It would
Correct.
quickly become beta, right? So
100%. And every algorithm out there would see it long before you ever did.
right. So I think that's really what goes into fundamentals, and I think the people that chase the short-term vision or the storytelling part of a stock or something along these lines is sort of what gives you the ability for it to be undervalued or overvalued, right? The stock goes down. Oh my gosh, we didn't realize how terrible of a company this is, even though from every metric, more people are taking on the products, the balance sheet's getting better, delinquency rates are controlled, and just from every point. But the market sucks. And whenever you're only looking at one stock, especially if you have 97% of your portfolio in a single company or something along these lines, you can say, what is SoFi doing wrong? When really it's more along the lines of just the macro environment sucks and people are scared, but that doesn't change the company. And the longer that you invest, 5, 10, 15, 20 years, like you said, the more you are being valued as a company and not a stock, right? What's the famous saying that the stock market in the short term is a voting machine, the stock market in the long term is a weighing machine, right? So weigh your investments, I guess is what I want to say.
100%.
Just watch the SoFi Weekly. Yeah.
The right comment.
Yeah. And you'd be down pretty good on your investment year to date, or what?
This is why we're not financial advisors.
Have you guys bought this week?
I buy it every day.
I actually did buy on Wednesday. I tweeted about it
For $6.52.
There you go. I told you guys I'd buy last weekly. I said come rain or shine, market open on Tuesday. I bought on Wednesday. Pretty happy with it. I think it's like $6.30 now. So I'm like, okay, cool. I'll buy more. I think March for me is going to be more of a heavy buying month. So I'm pretty excited for that. Get to lower some cost bases on some accounts that I can't really add to at all times of the year.
Yeah. No, the reason how I knew that number is I just got a third monitor. So I got my notes, I've got the stream, and then I've got my Tevis tweets exclusively. So I see every time that you send out everything. So I got it right here. But
just set up the notification, so every time he tweets, you just get a notification.
Or just be in the Discord.
Thank you.
We're on the same. Did we pin it in the chat? Did we put the Discord in the chat?
Same wavelength. I can pin it.
It's in the description.
Right now. It's in the description. Yeah, so everybody, we have a free SoFi Discord. It is in the description. We now have surpassed 200 members in that Discord. We have automated tweets, automated Reddit posts that pop up when people tweet things. I'll pin it in the chat right now.
Tevis, you set all this up, the automated bots and everything? You did this?
Yeah, and it's a work in progress. I mean, some of them are still getting set up. Some of them just need more curation in terms of not being a fire hose of just random stuff. I think the most reliable one is the curated tweets. So whenever one of, I think, 45 or 50 different accounts that Riley, myself, Tannor, we really chose.
And Michael.
Michael's a part of that. But I was just saying that we chose these particular accounts. Whenever they use the SoFi cash tag, then that will show up in the Discord automatically. Whenever we post videos, particularly about SoFi, that'll show up automatically. And it's totally free. So definitely feel free to join. We want to make it the #1 place community to talk about SoFi. Riley, is there anything that you want to add on that?
Yeah, just over top, the whole idea is just to make the best place for us to dive deep on this company. All these CNBCs, Yahoo Finance, all these big companies that we used to rely on information by are not covering this company in depth. And we've been doing this weekly for a long time. And it is crazy how much stuff that other people find on by a chance where there's some weird takes. Like last week, we talked about two people that used to work at SoFi that actually moved to public. We found out some really weird correlations that might be speculative or anything, but it's just interesting. And there's just a lot of coverage on SoFi that is being missed. And I think that Tevis's idea and our whole idea about this Discord is to just try to make the best place possible to get SoFi information. So yeah.
I think that's the main thing. It's just the information that's not making it into these Seeking Alpha articles, or it's not making it into, whatever the Tom. Thank you. I don't know what currency that is, but thank you very much. I don't know what's making it into these articles, but the fact of the matter is that there's a lot that is being missed with regards to SoFi knowledge, whether it's a leak, whether it's an email, whether it's an insider saying something, whether it's even something as simple as this golden cross that Michael tweeted about earlier this week. It's all in the Discord, and I just think that community is what really helps propel that knowledge around SoFi further.
Yeah, that's a perfect bridge to something else I wanted to mention around the mortgage that a lot of people probably don't realize. Something that I thought was really cool.
Guys, I just got to
SoFi.
dip right now because I got another podcast, so I'm out. Awesome stuff.
Thanks,
See you
Amit.
guys
Yeah,
next
Have a
week.
good one, buddy.
Bye.
So as I was applying for that mortgage via SoFi's app, they had 3 different options that I could choose from. As far as, do I want to minimize how much money I have to put down and pay a higher interest rate. So basically SoFi makes it back on the back end. Do I want kind of a more standard mortgage where I, don't really pay any points, or I pay a minimal amount of points and kind of get an average interest rate? Or do I want the lowest interest rate and I can pay points? There was actually an option where I would get thousands of dollars back from SoFi when I got that mortgage. So it would come out of what I put in my, now that's not my down payment. That's money coming from SoFi. They're actually paying me essentially a rebate. They're paying me points for me to then agree to a higher interest rate than what the prevailing interest rate is. Now you might ask, why would you do that? Well, you would do something like that if you're going to only hold that mortgage for a very short amount of time. You're only going to keep it for 5 years. You're willing to pay a higher interest rate now, and you want them to pay you points. On the flip side, if you think I'm going to buy and keep this house 10, 20, 30 years and actually pay off the mortgage, well, then it makes more sense to pay the points up front, get a lower interest rate. That's a pretty cool feature. It's a pretty cool option. I've not seen that with other banks. And just to have that ease of being able to do it, again, right on my phone. I'm not on the phone with a 9-to-5 banker that I have to, get out of work or take a lunch to call. It's an option I just have right there.
Yeah, and I think the online application of getting a mortgage is not something that SoFi has created, but the idea that it's directly in with your direct deposit bank and it's already there and you're in the app there anyway.
Yeah,
it's free to
and they're
apply
able to. The longer I'm a customer of SoFi's, the more information they have about me, which, like it or not, they have a lot of information about my finances. And so they're able to make a really smart decision on whether or not I'm a good person to lend to. And that's powerful as well. Most other banks are kind of trusting what you write down on the application. Of course, they do some vetting. They do a lot of vetting. But yeah, they have a ton of data. They can use AI to drive, is this someone that I want to lend money to or not?
Man, I'm so excited to see how that home loan segment develops as the year goes on, because it just seems that it was stagnant for so long, and now they're just hustling back now that they actually have fast-tracked a new partner. So first of all, I want to know who that partner is, selfishly, just so that we can do some mental math to see whether it is a buyout candidate. My bet is definitely that it will be. And then just seeing more updates on that. Like, I think I mentioned this in a previous SoFi Weekly, but home loans and student loans, they're a complete write-off from the market's perspective for this year. And so that segment, actually having some more details around it in Q2 and Q3, has a real opportunity to delight to the upside for the entire market's expectations.
What are your all thoughts on student loans in the news that has come out as far as Biden's new plan to potentially reduce or circumvent what the Supreme Court may end up deciding and shooting down the actual forgiveness?
I haven't read too much about it, to be honest. So I don't know if I'm caught up on the news. I've been just trying to post all this new content. I'm more caught up on Block right now this week than I am on SoFi.
Well, so I think there's two parts there, right? Number one is what happens with forgiveness. And then number two is like, okay, so number one is what happens with forgiveness and how much does that correlate with them actually stopping the resumption of student loans or extending that moratorium, for longer. And I don't think that those things are so correlated, right? I think that there is a world where a happy medium can occur where they say, hey, you can't, we're not going to approve the forgiveness, but we are going to resume the student loans, which is a middle ground. But for us, I think as SoFi investors, like resuming student loans is all we really care about, less so than the forgiveness, because our demographic doesn't fit the mold for somebody who would be forgiven. And then the other part of it is, I'm not sure that it is in Biden's hands anymore, right? I mean, we don't usually get into heavy politics on the pod, but I think that now that it's in the Supreme Court's hands, there is a natural timeline where these things will happen, and sure, it might get pushed back a bunch, but there is a foreseeable end to this. It's not necessarily going to get pushed out like 11 times.
Yeah, I'll have to look up the exact numbers, but essentially his new plan is, okay, if forgiveness itself does not come to fruition, which the Supreme Court is relatively packed conservative, it's likely they're going to shoot it down, in my opinion. Just my opinion, but I think they'll shoot it down. His new plan is, and it's actually, I think, a better plan anyways. There's currently a cap, depending on how much income you make. If you're under a certain level of income annually, there's a cap on how much of a percentage of your income you have to contribute towards your student loans. It lowers that cap. I'm pretty certain it cuts it in half. Now, that's a particular demographic, and you hit the nail on the head. That is not the demographic SoFi is going after. When SoFi advertises on, and I see their student loan advertisements all the time on Instagram, which is hilarious because they're targeting the wrong person. But for medical students, they're always, hey, you've got medical student loans, come to SoFi. That's who they're going after. Or I shouldn't say medical students, but people who have graduated in the medical field. Those folks aren't what Biden's plan is about anyways. They're well above that cap. So I actually think his new plan is something I can get on board with. And I couldn't really get on board with just a blanket, let's forgive this one and done that is very selective to a particular group of people. And it's just a weird setup. I actually think the new setup is better. And to your point, does not impact SoFi's demographic. And what we can come out of this with is hopefully resumption of the payments and people that actually want to then go refinance. I actually work with people who have said, yeah, I've got student loans. The payments are on pause. I've got money sitting in the bank to pay them off. But why would I pay them off? Like, I'm just going to wait till they come back and then I'll pay them. And so that's going to be, I think, a huge tailwind for SoFi.
Yeah, I hear that exact same thing a lot.
Just to ground everybody, on Tuesday is when the Supreme Court will hear the legal challenges of Biden's administration around student loan forgiveness. So we knew that the process was going to start in the end of February. That's actually going to be starting officially on Tuesday. So we'll definitely have more news on that coming up probably in the next weekly. We should have something to talk about.
Yeah.
Or immediately on our Discord.
Yeah, exactly.
Yeah.
It will be interesting to see how long it takes for them to come to a decision.
Oh, well, I think it's going to get extended. It's probably going to take way too long.
I think regardless, though, it's a delayed or not, it's a tailwind for SoFi. I see in this, one of the comments says, I feel like selling my SoFi to pick up Google. And I just feel like you're buying, I think they're both depressed stocks right now, but I think one has maybe an amazing tailwind, meaning it might get the valuation pushed forward, versus the opposite with Google, which I think maybe they're facing the strongest headwind they've ever faced, possible. So I've been pretty vocal about my anti-Google over the past month or so, and that's definitely worked out to be correct. I wouldn't rush to sell SoFi. Obviously, I don't know you, and you can do whatever you'd like, but I just for my own portfolio, I don't know how you see a company that's about to hit all these strides and then go, oh, I'm going to get out before that happens. I don't even think it's a buy the rumor, sell the news. I feel like Wall Street's not even hearing the rumor yet. You know what I mean? You know, is the AWS of fintech priced in? Is the student loans coming back priced in? Is, you know, all these things already priced in? But
yeah, and not to make this entirely about Google, but you have to remember too, that is a mature company that, of course, they're profitable. And if you look at the market in general, we're just here talking about SoFi. There's opportunities all over the place. So this is a, very particular conversation about SoFi and why I think it's a great company that I've thrown tons of my money into. With that said, there's opportunities all over the place, and there probably is some value there in Google, but it's a mature company. It's a very, very, very different investment than something like an up and coming SoFi.
Yeah, it really depends on what your goals are. I think Riley and I earlier this week were talking about this in the context of Tesla, which, I mean, he diversified in his portfolio from 3 to 6 companies, which is a big deal, Tesla being one of them. And our main conversation was around, in a blue sky situation, perfect world, where can we go? And I think SoFi, with the catalyst that Tannor was saying, has a lot of runway. But of course, like, there is more risk associated with that as opposed to a huge FANG company. And so it really depends on your goals. If you want to go for aggressive wealth accumulation or wealth preservation, you would pick one or the other, depending on what your risk tolerance is.
Yeah, I just personally, and maybe this is for another day, but I think, what's set in stone for Google right now is you have SoFi that is ripe for, disrupting a big legacy bank sort of area. And then you have Google, in my opinion, that's ripe to be disrupted. Whenever you're a market leader and you own the space, and new technologies are coming out that are maybe the strongest deflationary forces ever. I mean, this is not a Google podcast, but maybe we need to do one, because obviously I have some grievances to air out here.
Yeah, I know it's a pretty polarizing conversation, especially where ChatGPT was concerned. I know we've had this debate before with regards to, Microsoft versus Google, and like, how is that paradigm going to shift from an advertising perspective? But this is SoFi Weekly, so we will talk about SoFi.
The AI conversation, I think, is going to be more and more relevant when it comes to our SoFi Weekly podcast. Because there's no way, like, SoFi has to be AI centric in the future if we're even going to be considered the AWS of fintech in 10 years, So I don't know.
Can I have a contrarian?
Please.
People are going to hate me for this, but I just think that 2023, on the back of ChatGPT, has made AI such a freaking buzzword. It's not even funny. Like, in 2020, let's say, it was NFTs. And, before that, it was just like, Tesla's going to have this mass electrification. And then it moved to NFTs. And, now I feel like we're in this AI cycle of just everybody is AI this, AI that. And Technisys is a huge component to the value proposition. But honestly, next year, the buzzword is going to be something else, and all of the media eyeballs are going to go on to something else. And AI is still going to be important, but it's not going to be nearly as talked about as right now. I understand if SoFi was, let's say, trying to raise funding, the AI is what they would, rest on. But
tech-wise, it is coming. Every company is going to have some sort of AI integration. It is going to change everything in the next 10 years, I think. And SoFi is going to have some sort of, I don't know what the banking app of the future looks like when it's AI integrated. It's probably going to be like the best financial advisor ever for you personally. But that's like looking real far ahead. I just know that Technisys Kona company that just does natural language processing and just tells whether you're mad or not isn't going to cut it. Like, I would love to see if they actually have some master plan for building some sort of backend for AI or I don't know. That's probably going to be a couple years in the future after we're fully integrated, but that would be really fun to see.
Absolutely. Just keeping cognizant of our time, is there any other major topics or pieces of news over the past week that we haven't hit that we want to talk about?
Maybe I'll save it for next week. I'd love to talk about some potential other fintechs that how they compare to SoFi. Block is a really, really interesting one that just announced. Their growth rate expected at Cash App is going to be absolutely insane. I think that's important for the digital online banking space to know how our competitors are doing and the products that they're releasing and, you know, how they compete. I think Nubank is important in the way that they're SoFi in Latin America. You know, they're taking on the exact same sort of path of doing everything all in one roof. I'd love to hear why Riley saw my latest SoFi versus Nubank video, which was the numbers speak for themselves, but yet he said he doesn't like it. But yeah.
The Nubank is really cool. It's just I'm not smart enough to be able to invest confidently in a company that just touches so many different types, different countries, and even though like I might invest into it and I can make a lot of money in 10 years, I also try to invest in companies that I can literally just hold even if we go through like a nuclear attack. Like I just emotionally, emotionally, I'm saying like I only bring that up because Manish Prabhai, a famous value investor, talks about which companies could survive a nuclear attack, like just as a thought experiment, and he brought up Coca-Cola as an example because you could just hide the ingredients in a vault, and just like over time, people are chemically going to want to.
You invest in Open Door and shit like this. Like,
Hold
what are you
on,
talking about?
Exactly. Open Door is a different use case, but I'm not saying that like SoFi or any of these companies are going to survive nuclear attacks. I'm just saying, me comfortably, if like things go really bad, I'm not going to be able to. I won't sell Palantir because I know that they're going to be fine. I feel like SoFi is a really good hedge, and I would be fine if something bad happens. Nubank, I just don't know enough. Like I feel like there's so many external factors that I don't understand when it comes to that company in particular. That maybe it is a good investment, but it's not a good investment for me. You know,
fair enough.
Does that make sense?
But I had the same face that Tevis did whenever you were about to say, I don't like investing in a company that has so many different product lines. I knew that was about to come out of your mouth. And I'm like, okay, well, SoFi, we're on the SoFi Weekly right now.
You could have just said you don't like it. You went 10 layers deep to like nuclear apocalypse as like your reasoning.
I try to explain my investing strategy, but I really haven't talked about it that much. So it was like me like airing it out for the first time. But yeah,
I think
I brought nuclear attacks into it. So
maybe just on that same vein, minus the nuclear portion, Buffett had this really famous quote where he said, "Hey, you should only be buying companies that if the stock market closed tomorrow and was closed for the next 10 years, you would still be comfortable holding them." In other words, companies whom you're comfortable, you can sleep easy at night, holding them for a long period of time when you physically cannot sell out of that position. And just, I think that, for me, I saw Tannor's video, a fantastic video. Everybody should definitely go see it. It was very well done. And
I love this guy.
I do agree.
For me.
I do agree that, Nubank has some aggressive growth numbers, far exceeding even SoFi. The reason why I personally wouldn't touch it is that same concept where if everything was shut down for 10 years, I'm not sure that I can stomach any potential geopolitical concerns around Latin America specifically as the space that they play in.
Yeah,
so
the nuclear warfare thing.
Exactly, not necessarily nuclear warfare, but it's just like if I invest in Nubank, I'm investing in Latin America, and is that an investment I want to make?
Yeah.
Tannor, do you remember or do you know off the top of your head what Nubank's revenue was in their last quarter? I know they just reported.
1.45 billion.
Okay. So what I saw and what stood out to me, one, I like Nubank. I think that it would make sense as a broader part of a diversified portfolio, which obviously I don't have. Um, in banking, I like them. And obviously I'm fairly certain, doesn't Warren Buffett invest in Nubank? Isn't he famously a buyer of them? Yeah, looks like someone just commented. Yeah. What I would say that the reason I like SoFi more is somewhat touching on what Riley said. One, I'm a customer of theirs and I really like it. But two, it's the target audience. So Nubank has a massive user base, which is good. But if you look at that user base compared to SoFi's, SoFi is nipping at the heels. I mean, okay, they're what, 1/3, I think, of the revenue. Where's the revenue compared to Nubank's? It's less, but my point here is revenue per employee, profit or per customer. Profit per customer for SoFi is substantially higher, and it's because they're playing in a completely different league. To be clear, I like Nubank. I just like SoFi more.
If I could do sorry, we're gonna do this real quick.
Should I allow this on the stream? Should I let
We
you share
gotta
these
allow
numbers?
this. We gotta do it.
All right, very quick.
We gotta do it. Let me just so then we're not confusing anyone. Nubank is profitable, by the way, but I'm just gonna hide it regardless. So if we look at Q1 of 2022, SoFi's revenue was about 330 million. Back in Q2 of 2021 for Nubank, they were at 336 million. So quite similar, 6 million more, but that's about as close as a quarter as we can get. The next quarter, Nubank went up by 43% to $480 million. This continued all the way up to 1.4 billion. SoFi still hasn't even hit the next quarter. It'll take them a year plus, and they're not even guiding for that, by the way. They're guiding for like 423 million. All I'm saying is this growth rate is insane. Now the average revenue per member, like you said, much different of a story. But back in Q2 of 2021, SoFi made about $90 per member, and that's actually gone down to 87 per member. The same or the opposite. Let me make this a little bit bigger so you guys can see. The opposite is true for Nubank. $8 in Q2 of 2021 up to $20. So although there was an 11x revenue per member for Nubank, in a year and a half, that's shrunk down to 4.5 times. What is going to happen to the average revenue per member for Nubank in the next year and a half? And that's sort of what I think I'm excited for. And then how do they acquire these members? SoFi does make a lot of money per customer. We know that. But the actual cost at which they're acquiring these members is a joke compared to a global leader, not a Latin American leader, not an American leader, a global leader for customer acquisition costs in financial services companies. And the efficiency at which how much money they're making from these acquisitions is such a different story to SoFi. So I agree that that Nubank is much riskier in terms of their things that we can't measure, like international risks and potentially what happens with inflation there. All the credit products would die if something like Argentina happened, where inflation rates went up to 100%. Their personal loan portfolios, their credit cards would be worth nothing, right? And so that is really, really scary. And there's things like that are so important for the talk between SoFi and Nubank. But if you're talking about growth rates, there's not even a story here. Like it's like Nubank is just it's never been seen before. And you're having like hard stuck value investors like Warren Buffett go out of their shell to buy an extremely risky, fast growing company because it's never before seen growth rates. And and if I can just shill just a little bit more, I go in much more depth on my video, so you guys are going to have to go check that out. But if you guys have any counters, I'll absolutely listen.
I'll make one counter about Warren Buffett in particular. One, we have to remember the portfolio he commands is absolutely gigantic. Mm-hmm. He could buy Nubank tomorrow with the money in one pocket. And he's famously talked about how when you become that large, it becomes very, very difficult to ever beat the broad market. And so while yes, he has endorsed it with actual dollars, we're talking about a very, very small amount of a broader portfolio. So I think people, it's critical, but I think people, number one, put a little bit too much weight in what Warren Buffett does. Famously, he bought Delta, I think, right before COVID, and then sold it at a low.
All of
and
his airlines he sold.
Correct. Yeah, he's famous for saying every time he touches airlines, he loses money, and then he tells himself he's never going to do it again, and then he does, then he loses. I think he's done that 3 times in his career now at this point. And so I think that's the only thing I would say. So you're absolutely right, and that's what you said, Tannor, is why I like Nubank. I've seen the growth; it's impressive. But also, your own counter is what makes me nervous. I'd rather invest in a company that is denominated in US dollars first, like we are here with mostly US customers, right? Or only US customers right now. And that's to the point of like, would I be confident holding that company if the market shut down tomorrow for 10 years? I would be nervous. It doesn't mean I wouldn't invest. In fact, I actually have a few shares of New. And I plan to add to that over time. I like banks in general. Banks are a great place to put money because banks do very well, and Warren Buffett also likes banks.
And
so we're really talking about two different players that I think are both good.
So 2 things that you said there. One, I am 100% in agreement that I think financial services has outperformed the broader markets for decades. And Warren Buffett sees that. He's a large buyer of finance companies in general, but he can't buy Nubank. He's not allowed. He can't hold any sort of controlling share in a actual chartered bank. So this is why he's buying less than 10% of any bank that he owns. He asked a special permission from the SEC to actually hold a larger than 10% share in Bank of America. So that's sort of why I think that he owns still a small portion of New rather than putting the 20 bill down to buy the whole company.
But so really quick, to be clear on my comment on he could buy the company tomorrow, that wasn't so much like, why didn't he buy the company if he likes it that much? Why wouldn't he just buy the whole thing? My point was just in saying, like, let's understand that this is such a tiny fraction of his overall portfolio, because you're absolutely correct from a regulatory standpoint. But I wouldn't get too caught up in what he buys. Yes, he's a great investor, but he also misses as well.
All right.
Yeah, I'll also say, someone said in the chat, how much did Warren Buffett buy for? He bought nearly twice the amount that it's worth today. He bought around $9.32 is the expected cost basis. And today it's somewhere around 4 or 5. I think 5 something.
Okay, so just reining in the Nubank conversation, we did a fairly deep dive on Nubank in our previous episode of SoFi Weekly. I think it was somewhat, like half of our total live stream. So just reining that in, I think the last piece of news that we have for SoFi is the fact that, let me just share my screen, simultaneous to the Supreme Court starting the hearings around student loans. We have 2 sessions on February 28th and March 21st where SoFi will participate in investor conferences. So February 28th is the same day as when the Senate hearing will hear the Supreme Court. This is where CFO Chris Lapointe will have a fireside chat in the KBW Fintech Payments Conference. And then on March 21st, we have a Bank of America Electronic Payments Symposium with CEO Anthony Noto being in that fireside chat. So definitely something to look forward to, because every single time we have these chats with the SoFi executives, we tend to generally get some tidbits of the latest updates around where they are in terms of their development. So something that we even talked about in this podcast was the fact that, by 2025, they're going to be on all migrated in terms of they're going to be all in-house. That's a piece of information that we got verbally from Anthony Noto on one of those sessions. So I'm going to be listening in to Chris Lapointe on February 28th to just see where his head's at with regards to 2023, hoping to hear a little bit more about credit cards and that expansion specifically. But with that said, I think we can start to wrap this video up. Everybody's links are in the description. If you want to follow Michael, his Twitter is
On the screen.
on the screen.
Yeah. Oh, perfect.
Wow, you're getting
Awesome.
fancy.
I know.
That's
I
pretty
wanted
cool.
to use that function all hour long. So that's Michael's Twitter. Definitely follow him. Wealth of information for SoFi, or you can join the Discord, in which case you will also get curated tweets from Michael whenever he tweets about SoFi. And if you're not following this channel, sometimes periodically, we will have SoFi Weekly on this channel, in addition to Tannor's or Amit's. So definitely subscribe to the channel and check out everybody's links. Check out Tannor's new Nubank video.
My heart.
Mm-hmm. And yeah, anything for the group to add?
No,
Looking
man.
forward.
We just recorded a video together. That's going to be quite exciting. I'm
gonna be
editing
very
that
fun.
right now. Should be up by, let's say, Sunday.
Also on Sunday, the highlights of this episode should be out. Every single time we go an hour and a half, and I have to cut that down to half an hour, I curse Tannor and Amit, and this time it was entirely my fault. So I'm going to have a great weekend, but definitely check that out on Sunday as well.
Yeah, you can just cut out all that Google talk. You're just going to splice that out and not put any of it in.
I'm going to Command F whenever you talk about Nubank and cut all of that out.
No, you know what? What you should do really quick. Let's talk in the Discord or wherever this discussion is being held. Like, do you guys like the actual, mix of conversations? Do you like comparing SoFi to other companies? Because really, that's something that, as a community here, we're trying to figure out. Like, does the SoFi Weekly stay a SoFi Weekly, or have we kind of nailed down this company and understand what they're offering? And we'll do the news updates as they come. But some weeks it's a quiet week and it's business as usual. During those times, we look for special guests. But like we said, like, the community is still small, and everyone that we've could have on the channel, we're having on the channel. I promise you guys. So pretty much, do you guys also want to see about Nubank, Block, some other ones that we're talking
PayPal,
about? Square versus SoFi.
Yeah, so basically, I think to the community and the people that are consistently viewing the content, let us know whether it's in the Discord or whether it's on Twitter. Possibly we could even throw a poll up to see if we should just keep SoFi specific content or if we should incorporate other names into the discussion. Probably not to the extent of other names having a full episode to themselves. But for example, 2 episodes in a row, we've had a healthy chunk of the time go towards Nubank because it is an interesting opportunity. So really curious to hear about that. How can we make content that you would want to watch, or what do you want to learn more about? So let us know, Discord or on Twitter.
Yeah. Like the one in this comment saying mostly SoFi Weekly. I mean,
that's valuable.
Exactly. Yeah, that's definitely going to be the case.
Yeah, and Tim, if you want Noto to come on the channel, you're gonna have to tweet him, my man. It's not that easy. We've been trying.
It's not gonna come.
So just tweet him. Just make sure that Amit doesn't see the tweet because he's gonna refer to him as like bro or something, and that's just gonna set us back.
Yeah. Yo, Anthony Noto.
Yo.
Someone did pretty interesting follow me recently. Maybe we can get them on the podcast. The head of engineering at Technisys.
Just
Michael
Handy?
I don't know. I need to go check. But
I love how we both knew that, Riley.
Right.
I didn't even know who it was. They added me, and I'll go find it for you guys. But yeah, potentially we can have him on because he recently just followed me.
Yeah, I'd love to have him on. He's like a very hardcore like product person as well in terms of how he thinks of things. So
this is a super weird question. Does he speak English?
Yes.
Because all of his tweets and everything is all in Spanish, so I don't know.
What's his name, Tannor?
I'm trying to look for it real quick. Just so many notifications. No,
so popular.
So stupid.
Okay, cool. I think that's it. We won't belabor the audience any further. We lost half of them when we started talking about Nubank. So
every time you start doing an outro, people leave.
Yeah, fair enough.
Yeah, for sure. Hey, I'll just say real quick, thank you for having me on. I appreciate it. And thank you for everyone that's watching. And if you follow me, it's not just SoFi. I talk a lot about other stocks as well and real estate. Those things are my passions. So appreciate anyone who does follow.
I have a small quick question for you before we head out. Did Elon Musk comment on one of your tweets, or is that somebody else that I?
Are you asking me?
Yeah.
Definitely not me. No, but
No?
Anthony
Okay.
Noto and Chris Lapointe both did. That was kind of my like big jump into Twitter again.
Yeah.
Was me tweeting about Anthony Noto's stock-based compensation, how it was misunderstood.
That was
And
awesome.
much to my surprise, he responded, and then Chris responded, and that started the whole
Yeah.
thing. And honestly, that changed the narrative. Like them actually kind of playing a little offense. I think they just needed someone to point it out for them so they could say, yes, this is correct.
It was wild. That was really cool. That really like actually changed a lot of the news that we covered on SoFi. That was really cool.
Yeah, I high-fived my peer at work when I got the notification on my watch. I was like, Anthony Noto replied to my comment? Like, it was cool. It was cool. I had like 10 followers.
Yeah, the person, by the way, that's following me is Sebastian Taro.
Okay, so
Tarnowski.
Yeah, I mean, we can definitely reach out, but that's always cool, like, because Michael, just to build on that point, it's always interesting to see Anthony Noto comment on these like small accounts with small followings, because we could very easily have people in the SoFi organization that are consistent viewers of the podcast, which is very surreal to think about, as the people that are on the podcast talking about it.
For sure. It shows that he cares, and he actually talked about it in an earnings call. The most recent earnings call, he talked about if you follow any kind of social media on Twitter, you can't not see our posts and see people talk about, for example, he was talking small businesses and self-employed. So he watches it closely. It's not just some aide or something that's doing it. I believe very much it's him, and that's awesome.
He's taken customer service calls before too. I actually know people personally that have called SoFi and either got the CFO or CEO Anthony Noto on the phone, which is like wild.
Sounds like terrible news.
I mean, he doesn't take them often, but like, I don't know.
Yeah. But
Well, there have been there's been certain cases, I think, that probably warrant it, where people have made some accusations on social media, and that's where I've actually seen Anthony reply and say, please reach out to this person directly. Like, that's a serious accusation. We want to make sure we get that correct. And I think that's awesome that they do that.
All right, guys.
Great place to end it. Thanks, everybody. See you next week for another episode of SoFi Weekly.
Bye for now.